This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC oil output fell in January for a second month, a Reuters survey found, as a drop in exports from Nigeria and Iran offset a rebound from the United Arab Emirates where field maintenance had curbed output in December. The OPEC pumped 26.53 million barrels per day last month, down 50,000 barrels of oil per day from December's revised total, the survey showed on Wednesday, with Nigeria and Iran posting the largest drops. The modest decline in output came as the wider OPEC Plus group is keeping production cuts in place until the end of March due to global demand concerns and rising output outside the group. OPEC Plus on Monday decided to stick with its plan to start raising output in April.
U.S. crude oil inventories rose sharply last week as demand softened on ongoing refinery maintenance, the Energy Information Administration, EIA, said on Wednesday. Gasoline stockpiles also rose more than expected, while distillate inventories declined. Crude inventories were up by 8.7 million barrels to 423.8 million barrels in the week ended January 31st, the EIA said, compared with analysts' expectations in a Reuters poll for a 2 million barrel rise.
Moving on to the top news in the energy sector.
India plans to review import tariffs on over 30 items, including luxury cars, solar cells and chemicals, a senior finance ministry official said, potentially leading to increased imports from the United States as global trade tensions grow. The move, aimed at reducing average tariffs, comes ahead of Prime Minister Narendra Modi's visit to the US next week. In a bid to avoid President Donald Trump's growing tariff actions, India has already reduced average import tariff rates to 11% from 13% on several items in the latest budget. The finance ministry official did not give the time period for the completion of the consultation process, but industry analysts say the process could take months.
Oil prices edged up in Asian trading on Thursday after Saudi Arabia's state oil company sharply raised March oil prices, but the increase was barely a blip on the biggest slide in benchmark Brent prices in nearly 3 months the previous day. Brent crude futures rose 8 cents to $74.69 a barrel by 0422 GMT. U.S. West Texas Intermediate crude was up 15 cents to $71.18 a barrel. Oil prices had fallen more than 2% on Wednesday as a large build in U.S. crude and gasoline stockpiles signaled weaker demand, and as investors weighed the implications of a new round of U.S.-China trade tariffs, including duties on energy products. Next, we have the top news in metal market. Gold prices edged higher on Thursday, hovering near record highs hit in the previous session, as tensions in the China-U.S. trade war lifted safe haven demand, while investors awaited the U.S. jobs data for clues on the future direction of interest rates. Spot gold was up 0.1% at $2,868.94 per ounce, by 0507 GMT, after hitting an all-time peak of $2,882.16 in the previous session. U.S. gold futures shed 0.2% to $2,887.90. Investors are trying not to miss this rally as they place their position because they are happy with the returns. That's the reason why it's hitting successive highs, said Soni Kumari, a commodity strategist at ANZ.
Iron ore futures rebounded on Thursday, supported by a softer dollar and Australia supply worries, while investors looked for fresh developments surrounding the trade war between the United States and top consumer China. The most traded May iron ore contract on China's Dalian Commodity Exchange rose 1.12% to 815 yuan, $111.92, a metric ton by 0311 GMT, after closing lower on Wednesday. The benchmark March iron ore on the Singapore Exchange was 1.74% higher at $105.60 a ton. Australia is in its hurricane season, and there is a risk of disruption in shipments, Chinese consultancy Hexin Futures said in a note.
We will now look at the top news in the agricultural sector.
Most global importers last year took advantage of plentiful and cheap U.S. bulk agricultural commodities, including soybeans and corn, the top ticket items. But China somewhat sat out on that rush. Milestones were notched among the top U.S. bulk grain destinations in 2024 as average export prices fell by more than 1/5 versus 2023. Lower prices meant this group of commodities pulled in 5% less revenue than a year earlier, but the quantity was up significantly according to U.S. Census Bureau data published on Wednesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.